Hey guys, it's Max. Thanks for tuning in the station. Welcome back to the Daily Covered Caller Midday Edition. We'll check out Defiance, Yield Max. Then we're going to talk about the video I made yesterday, $1 Million Baby. And also I had a question about retirement buckets, and we'll look at a meme stock and a pre-earnings play just really quick is what we'll do that. So right now, let's get out of here and go to the spreadsheet we go. And I made some updates last night with the past dividend payments. So today these guys sold options for $17.55, and they cost nothing to buy back. The problem was yesterday these guys sold options for $23, which was a lot of premium, but they ended up losing money on the trade, even though they brought in some nice premium. Well, JPY is at 17 cents a share positive for the month. Not bad. The earnings, well, the dividend estimate right now is only 39 cents. And I checked the math. I think the calculation should be right. So I was noticing the way it kind of works. You see, you could see in there there was a couple of times they got a huge bump from when volatility increased. January and February, the market pulled back, volatility jumped, and they had a 20% increase in dividends just from the prior month. Well, then the same thing happened from March to April. They had like a 35% increase in dividends. But then whenever the bull market takes over, they get back in the compressed volatility mode. So the bull market dividend, I would definitely say, is the 50 cents. Then the 58 and 60 cents, those were elevated. But then March was back to the bull market, so 55-cent distribution. April, we had another pullback, so that was an elevated, which was nice, an elevated distribution, 35% raise. We'll take it. Then in May, the bull market started up again, 55-cent distribution. Then in June, 46 cents distribution. Now in July, we're looking for 39 so far. So it wouldn't be, it would fit the trend, right? Unless we get another pullback. I thought yesterday might not be the start of another little vicious 5% pullback. Those pullbacks are good for these funds because they trade daily volatility, and that jacks the daily volatility up, and they make a little bit of extra money versus the funds that do the monthly options. All right, so that's JPY. Let's look at triple QI. These guys sold options yesterday for 127. Today they sold them for 107. It's a lot of premium. Unfortunately, yesterday was a gigantic loss. They had to buy those options back for more than $500, making a $5 million loss. Well, today's going better. They're looking like they're going to make $1.3 million pretty easily. So that makes earnings per share 15 cents, which is respectable. And the dividend estimate at 65 cents, which is also respectable. These dividends exhibit the same pattern. December bull market, so you had a low payment, 62 cents. January, February, you get a bump. That's like a 30% bump right there into January and February from December. Okay. March, we're back to the bull market, 79 cents. April, we get another bump. Now that's not as big of a bump on this index, but it's a little. It's 86 is up from 62 where it was in December. But in any event, you did have a little increase, here. Then it starts going down again. Bull market's back, 80 cents for May, then 65 cents for June. The bull market's really back. The face rippers here, we're starting to face rip again on a daily basis. And sure enough, what are we looking at for July? 65 cents. So we'll keep an eye on that. So let's check out IWMY and see if the same patterns emerge. Well, first of all, as far as the daily options, they sold options for $19 yesterday, call it, and they're selling today for $17. So that's not bad in either case. That's a lot of premium. They made all the money yesterday. They captured all of that. Their options expired out of the money. Today, their options look like they're going to expire out of the money. IWMY is up 19 cents a share on the month. I mean, this one's doing great. Dividend estimate is 64 cents, which is light for these guys. I mean, I guess last time it was 69 cents, so it's not too light. But their volatility is getting compressed in this one. Now, these guys came out a month later, so, but they did see a jump from December to January, a 29% jump. Then February, March, distributions went down, and then they saw a major jump, a 30% jump in April. $1.41, that was huge. Okay, but then they saw a major decline because the bull market started again into May. And then into June, they were off another 50%, 40% or something. And now they're looking like they're going to be off a little bit, 64 cents, or in line with how they were last time. All right, so that's it. Oh, yield max. So let's not yield max. Before we go to yield max, let's look at USOY. USOY rolled an option. I know the spreadsheet's still a mess, but this blue line, this 82.5 strike option, they sold 920 of these, and I was worried about them. They expire tomorrow. But it's 82.5, right? And the price of oil, or the price of USO, has been trending down. It hit 82.5 for a little bit up here on last Friday, but that was a fake out. It wasn't a real, evidently it was a fake out. So the price has been declining on USO all week, down into the 81s and then into the 80s. It even got down into the 79s before it bounced a little bit. So these guys kind of took their loss, and they really didn't even lose that much money, but they went ahead and before they lost a lot of money, they covered this one, and they covered this 82.5, and they rolled to an 80.5 that also expires today. I think it was a pretty aggressive little move, and it's looking like it's going to pay off well for them. Max profit for that trade is at $80.50. Right now, the market's trading at $80.38. Okay, so they're looking good on that trade. Nice job, guys. So now we're going to go over here to the yield max ones. So let's look at Tesla, which would be Tesla and crash. This one for once is staying between the two strikes. If you run the strategy, the both at once strategy, you want them to be between the two strikes, the sandwich, or even want to call it delta neutral. Delta neutral haven't been very neutral lately because the deltas in one direction have been getting crushed. Anyway, that happens when you do covered calls sometimes, or not covered calls. Well, it happens when you do that, but it happens when you do iron condors. This is a de facto iron condor, the Tesla sandwich, de facto iron condor, and iron condors lose when you have moves like this. All right, so that's it for those guys. Let's look at NVDA. I did want to say that Tesla, I did want to say this, that these guys rolled into, the Tesla managers rolled all the way into next week. They have the 275s for next week. They were stuck down here, and they used the prayer method for a couple of days. The sad thing is the prayer method would have ended up working for them, unfortunately. But they were blown out on their 245s, and those expired Friday, today, in a few hours. Okay, so, but with the prices going up and up every day, they had to do something eventually. They waited 1 day, used the prayer method, 2 days, used the prayer method, 3 days, and then they said, no more prayer method. We're going to roll. They rolled, and unfortunately, it came right back to their strike, which is what you're praying for when the prayer method happens. So, anyway, hindsight's 2020, but there's lots of examples of the prayer method not working, like on this day and this day and this day and this day. It did finally work 1 day out of 7 or something. So anyway, all right. We should pray anyway, right? You shouldn't pray for stock region. Praying's a good thing to do anyways, but not for stock prices, though, for more important stuff. All right, so that's Tesla. Now, yeah, NVIDIA. These guys are working the two-strike ladder, and they're right about a max profit. NVIDIA's on the high for the day and going up. AMD's looking good lately also. AMD's strikes are blown out, but they're using the prayer method. This may be an example of where, and then this cat, and also it doesn't, on a cover call strategy, when your strike's blown out, that's not a bad thing. It's not like you're losing money. there's an opportunity loss. But so when you pray for it to come back to your strike, you're just, praying that you get in a little better position from an opportunity cost wise. And also because if it comes back to your strike, you look smart for not rolling. All right, here's Amazon. Amazon's blowing up today. Market's looking really good today. Just a bounce back after yesterday's huge fake out. What else do we have to look at? Micro strategies, MSTR. The high yield fund is MSTY. They have a 2-strike ladder. They're blown out by a little bit. Both of their calls are in the money, but I'm sure they're just going to let them expire and then roll into next week. Or hopefully they won't. I mean, they're going to get exercised because they're in the money, but they'll cover them before they get exercised, hopefully, and establish a position next week. And when they do, I'll put it on the spreadsheet. All right, and then finally, Coney or Coinbase. This one's just kind of been grinding for a couple of weeks, down around 220, 230, 200, or I'm sorry, between about 215 and 225 or so. Been bouncing back and forth. They have the 227.5 option sold short. So they still have a little bit of room for capital appreciation, about 3%. Okay, so now let's go back to the sheet and see what else we were going to look at. Oh, yeah. So if you guys didn't watch the $1 Million Baby, watch that. And I got a viewer question about that, and that's all I wanted to say. So he was asking about retirement buckets. He said, hey, does this include retirement buckets or whatever? But anyway, so I Googled retirement buckets because I thought I knew what they were, and it was what I thought. But yes, so my scenario I didn't explain very well. This is a guy that has maybe $1 million 401k, but that's not all he has. That's just from his job. And that 401k, because it's all in growth, it was only like 800,000 last year, but the market's up. Growth is up 30% this year. So now it's like 1.1 million. So it's how would a guy like that hedge that paper gain that we've had in the markets, especially if you thought maybe with the election or maybe with that maybe here the market would pull back here. So, I was just showing a hypothetical scenario. But yes, this guy also has however much cash you have to have set aside in case you lose your job, 6 months of cash set aside. He has that. And he also has a house that's mortgage is half paid for. So he has other assets, but the $1 million 401k has a gigantic paper gain. So how would a guy protect that? So I think I showed a reasonable way. I'm going to show it real quick. I'm just going to show the $1 Million Baby. We'll do the end of year edition. It costs $35,000. You could travel around the world. You could probably, no telling what you could do. Maybe not around the world, but you could go to Paris and stay in the best hotels a couple of weeks. You could do a lot with this kind of money. But or you could do the responsible thing, and especially with the way our politics are going and stuff. And let's say that something happens around the time of the election, and the market perceives it bad, or October. There's always October surprises. There's no telling what's going to happen this October. Boom, market drops 20%. Okay. Well, the whole essence of this strategy is, okay, so you're up $254,000 on paper with this spread. It's your long 5 options or long 7 options and short 5 options, but all together you're up $254,000 and you can hang on to it because these don't expire until the end of the year. And volatility doesn't hurt you. In fact, this monetizes volatility. The only thing that could happen is you could be mad if the market dropped 20%. You could, your $1 million or $1.1 million 401k is now only worth like 900,000, but this option position is worth a $250,000 more. So if you were going to have a margin call, no margin call. If you wanted to, you could close this position. You could close the position, realize the profit, and then use it to buy stocks, to buy the dip or something. Or, since it's a hedge on your bigger portfolio, if your bigger portfolios you care about, all you care about, you could just keep this. So if the market drops, another, 10%, okay, well, then you're fully covered. Once again, no margin call. You could sell this for cash if you wanted to, if you needed to, but you don't have to, right? But then, the end of the year is coming and the market's rallying, and you're like, damn, I should have sold it when it was worth $400,000. What did I do? And the market's rallying. Even if the market rallies all the way back, you haven't lost anything. You've lost the $34,000, but it kept you from getting a margin call. It had you totally protected. That the problem with most hedges is you have to decide to sell them, and this one is designed just to keep on. If the market starts dropping, it'll draw all the way down to zero. It'll cover $1 million portfolio. Doesn't matter what happens between now and December 31st. It's totally covered plus a little. Anyway, I'm really interested in this kind of strategy. That's the gist of that. Watch the video. Then all I wanted to show also is there's a GME meme stock, or this is just a cheap way. It's a 4-legged double diagonal. I've made a video on this and shared the link, but this is a long volatility play. You can put these 4 legs on, and then you're hoping that as time goes by, that volatility goes up or price goes up. This line goes here, but it's just $100 trade. You're trying to turn $100 into, 100, but there's no upward limit on what you can make. If the market, if Roaring Kitty tweets and this goes to 100, you'll still make 100. But anyway, it's a theta positive trade. You're earning money from time decay, and you're able to play a meme stock. And what you're really hoping is that the price of the stock will, go up to about 30, and volatility will go up, and then you'll make the money. You'll make $200 or $300. It's just a small trade. But if you wanted to do this 10 times, you could risk 1,000 and try to make 2,000 or 3,000. If you were a big believer in this strategy, in that. Okay, so other than that, and I have the same kind of trade, you can also do it for pre-earnings. Here's one for Tesla. Same thing. It's a double diagonal, 4-legged spread. No, nothing naked. This one has about $700 risk. What you're playing for is you're playing for time to pass, which it will. Tesla's earnings are July 23rd. So on July 22nd, wherever the market is, you'll take this off. Okay, so if Tesla drops more than 2.4%, you're going to have a loss, and so in other words, if Tesla's less than 245, it'll be a loss. But if Tesla does what I think it'll do and stays around here and kind of meanders higher, and then as we get closer to earnings, people start wondering, hey, is Elon going to say something crazy? And so people will start talking about it and tweeting about it, and this volatility will increase. And that's what I'm really playing for. And then for time to pass, and then I'm hoping this thing would be worth anywhere between nothing. But but you're trying to make $400 or $500, and if you nail the strike or whatever, and you hold it longer and it goes right to the, that's up to you to make those decisions. It'd be possible to make 700 or 800, 1,000 even on a trade like this. Anyway, that's the way I like to play pre-earnings plays. And I would take that off right before earnings. As soon as earnings come out, volatility is going to go the other way and going to get crushed. This is just anticipating volatility being bid into earnings, and maybe the price either staying firm or drifting up. If you're bearish on Tesla, this would be a bad idea. This is just a pre-earnings. I'm just showing you guys a way to earn time decay and to have a little fun. That's the way I like to do it. I don't know. Show me if you guys have a more fun way to do it, but that's the way I like to do it. I did it on Chewy last week, and I lost money. So I'm not saying it's a great strategy, or it's that you make money all the time, because Chewy's volatility didn't pop. I was hoping anyway, whatever. It is what it is, right? All right, guys. I appreciate you guys being here. I think we've covered it all. If you want to, let's do this real quick. Let's just see what's moving at this hour. All right. Well, big surprise. Vivix is down the most, and Crash, USO, which these guys made a great move since USO is coming down. That's the right move to make, is to roll down. They would have been staring at a big loss from those 82.5 or those 82s. Okay. Dollars down, Microsoft's coming down. But anyway, the ones that are going up today, look at this. Mr., which bodes well for Misty, of course. Tesla bouncing today. A 3% move in Tesla seems like nothing because of like, you know, how it's been lately. NVDA on the highs of the day. Coney kind of grinding for the past couple of weeks. AMD is looking really good. GME, speaking of meme stocks, I hit one of these in real life and I made content about it, and it was back here. It was even after it popped. I put one of these on and made content about it, and then there was one more pop, and then I took it off and I put it and I rolled it into one for the next week with the profits, and then the one in the next week, then volatility collapsed and that one lost money. So I just lost the money I made from the prior week. But I'm obsessed with these four-legged straddle strangle swaps, double diagonals, because trading volatility is a whole new frontier. Forget about trading the direction. I mean, that's cool too, but I've had more luck trading going long volatility. At times I expect volatility to increase, and then being short volatility at all other times. So that's just my theory. All right. Well, it looks like that's about it. We'll let you guys out of here. I mean, Bitcoin, maybe we haven't checked out Bitcoin in a few days. It's just right here grinding. Look at that. I drew all these lines, and it's where all the lines converge is Bitcoin's too noisy on that time frame. I think that the daily time frame makes more sense I can make more sense out of this chart, but I have no idea. I have no idea what to think about that chart, but we're at a key spot. I mean, we're at a key point, kind of like we were back here, and we broke out. So we'll see if we break out this way or if we break down, more breaking down. All right, guys. Well, I really appreciate you guys being here, and I'll be back this evening with an end of market show, most likely, especially if something interesting happens. Otherwise, I'll be back this weekend with some more content. You guys have a great day. Thank you very much.